It's time for Suttie Mortgage Show episode 4. What is up, everyone? Welcome to another episode of the Suttie Mortgage Show. Got a bunch of stuff on the plate to talk to you about, so let's dive right into it. First of all, the segment I always like to start with, and that is, what did I learn this week? And I've been focusing a lot on what I learned in like social, on the different platforms I'm using. And as some of you may or may not have seen, I haven't been as active this week as I have in the past. Just we have a lot of things going on in the office, so it's been a lot more static posts and things like that. The one thing I did differently that I had never done, but I mean I know a million of you have done, is the little slide deck at Insta. So you have multiple pictures, and we thought that was really great in a progression. What we used it for this week was the 7 homebuyer mistakes. So the first time homebuyer mistakes is that slide deck we used, and I think it was pretty effective. It was a neat progression, so nothing that's really shaken the world. It's people have been using that type of post for a while, but it was new to us, so that's kind of what we learned how to do. It was easy, and I think effective for that kind of stuff, a build and a progression. So that's what we learned this week. What's going on in the market? Well, I think there's no news to anyone is this coronavirus thing is really taking a hold, and it's occupying not just like the health side of it, but just it's occupying the media and the markets, and it's really having an effect on a lot of things. People aren't going out. They're, I know that as of the shooting of this video, MLB, NBA, and NHL have all shut down. So it's showing the impact, and that's kind of having a trickle effect. We haven't seen any direct effect on rates yet. And what that's going to do, I don't know. What we have obviously seen is the rates have come down a lot. They're really low, but that's what we're seeing. But that leads me to a falling rate market, because that's what we are right now. And it's great for people in regards to affordability. You know, when we were trying to qualify you and the rates were higher, it gets you a little more bang for your buck. It gets that payment that maybe maybe a couple grand a month was tight, but now it's 18. So that's great. I'm happy that people are getting those low rates. What the challenge I see with a falling rate market is that people lose track of everything else. They're only laser focused on, can I get a little bit lower? What a little bit lower? How about a little bit lower? And they forget about the overall package of either the goal they're trying to achieve, or just quite frankly analyzing a mortgage and its value. Rate also obviously uber important, but can you prepayment? Can you get out of it? Can you change your payments? Does it move to another property? How's the customer service if you need anything done? There's a lot of other factors you have to come in with. So be pumped that you're getting low rates for sure, but don't take your eye off the prize, and make sure you're also analyzing all the other factors that come into play when you're trying to get a mortgage. So I think that's probably, if there's anything you take home from that kind of the state of the market, that would be it. Making sure you keep your eye on the prize, you look at the whole thing, not just the rate in this falling rate market. And to be honest with you, the same thing happens when the rates go up. Whenever there's big swings, people just kind of focus on that one thing. So who have we helped this week? Much like our last show and our last episode last week, we are getting a lot of first-time home buyers and love them. Having a great time walking these people through the process, helping them, and getting them to that finish line, realizing it's actually not that bad when you're working with the right people. But we also did a couple debt restructures here at the office, and what we see actually a lot here is not necessarily someone coming with credit challenges, whether they're behind on payments, they just, they're in trouble. It's, they have a mortgage and they have a car and they have a line of credit and they have a couple things. They're keeping up, but they could be paying it back better. They could do a restructure and then get that debt paid off way faster. So that's what we have a lot of success with, breaking down those numbers and showing people how beneficial restructure and paying your debt off with a plan is, as opposed to just letting it fly. So lots of debt restructures this week for sure. Finally, the last part of the show, probably the most popular, question of the week. And today's question of the week is what is CMHC Insurance? And that's the funny part about the question itself, is CMHC actually isn't the insurance, it's the provider. So much like it's not it's a car, not a Honda, same difference. So in Canada, we have 3 insurance providers. Number 1, CMHC, the Canadian Housing and Mortgage Corporation. We have Genworth, and we have Canada Guaranteed. Now, they all do what we call default insurance. And what default insurance is insurance placed on a mortgage that in the event of a default, you don't pay, you run away, whatever happens, the insurer will pay out the mortgage lender. So that's the purpose of it. It's what puts lenders' minds at ease, knowing that if they, deal with someone that's only putting 5% down, they have the peace of mind knowing that if something goes sideways, the insurer is there for them. So it's actually not called CMHC Insurance, it's called default insurance. For the most part, they all do kind of the same thing. Each has a little bit of a niche here or a niche there. The pricing is pretty much standard across the board. But and a lot of times, unless you want a specific unique product, the lenders just pick which insurer they're going to use, whether they have a good relationship with them, they're easier to work with. But the lenders usually choose, unless you're after a specific product at a specific insurer, and then of course we request them as brokers. So that's what CMHC Insurance is. It's default insurance, and there's 3 providers of that. If you have any questions about these topics or any mortgage questions, we love to hear from you. Jason Suttie with Suttie Mortgage. Your story starts here.